7 years. I am your annuity business development person. So I'm really your contact here at Global Atlantic. I have the pleasure of working with AMS and World Financial Group. You guys are my account. I cover the whole country. So if you need anything, please feel free to reach out to me. And I've been with Global Atlantic for over 7 years, and I've been in the industry for over 20 years. So I have built up a lot of knowledge about annuities. And tonight I'm going to tell you, I'm going to give you a little bit of history about Global Atlantic, and then talk about our annuities and where you can use them and position them with your clients. And if anybody has any questions as I'm going through this, please yell them out, put them in the chat, whatever, or we can get to them at the end, however you want to do it. But I love answering questions. So let me share my screen really quickly. Oh, can you turn the sharing on for me?
Did you get it?
Let me see. Yes, thank you. So, into slideshow mode. Okay. All right. Can everybody see my screen?
Yes, we do. Thank you.
Okay, great. All right. So what I'm going to talk to you tonight about is Global Atlantic. We put forth a lot of enhancements onto our annuity products on May 31st, and I'm going to go over those. But I'm first going to talk about the history of Global Atlantic, and we like to think of Global Atlantic in 3 phases. The first was basically the foundational phase. Our top executives, basically they were at Goldman Sachs. Everybody knows Goldman Sachs. They separated from Goldman Sachs in 2013, and they acquired Forethought Life Insurance Company, which is our annuity company. And then we achieved top 5 and ranked in fixed annuity sales in 2016. And then we rebranded everything under the Global Atlantic name. And then in 2021, KKR, Kravis Kohlberg Roberts, private equity firm, they were looking for an insurance arm to put in their portfolio. They didn't have one, and they wanted to add one. So their CEO got together with our CEO, and they thought that we would be a nice fit for them. Our cultures matched, their philosophies matched. So at that time, KKR owned 63% of us, and Goldman Sachs still owned 37%. Fast forward to January 1st, 2024, the partnership was working out so well. We're fully owned by KKR now. And when they bought us with cash. So they didn't have to sell off any of their investments to buy us. They bought us off with cash. We sit on the books right next to them. And with them behind us, we are basically going to be in a great position to become World Financial Group's #1 partner. KKR likes to invest on the long term, and they have expertise. And with their capital behind us, we are able to put forth all these products and enhancements I'm going to show you tonight. And as you can see, we are an A-rated company across the board. We just got bumped up to A with Standard & Poor's this year, so we're really proud of that. So we are a stable company offering retirement products that are going to help your clients retire comfortably. So that's a little bit of the history of Global Atlantic. And then I want to talk about, so basically with annuities, there's 3 reasons why people buy annuities. The first one is for growth and accumulation. They don't want to lose any money. So when you're in what I'm going to talk about are fixed indexed annuities. And in a fixed indexed annuity, you get, you're not going to have any downs in your account. We're basically mirroring the market. We're not actually investing in the market. So because of that, you're not going to lose any money. So that's a reason why people would want to. One of the reasons why people would want to invest in an annuity. They're not going to have any volatility, and they're basically zero is the hero. They're not going to lose any money. And then another reason people buy annuities is to create a guaranteed lifetime income stream. And I know Brittany touched on these topics, but they want to guarantee a lifetime income stream that they cannot outlive. And the third reason why people buy annuities is for long-term care. So I want to talk about our, some of the enhancements that we made. So our 4 Accumulation 2 product is a product that is just for growth and accumulation. And one of the riders that we just added this year to increase is our premium bonus. Clients can elect to have a premium bonus on their, and it was at 10%, now it's at 14%. So if somebody put in $100,000, their account value day one would immediately be $114,000. They would get that bump. And I'll go into more details on that. I just wanted to give you a quick overview. And then on our Income 150 Plus SE, that is a fixed index annuity with a lifetime income rider. It will generate a lifetime income. And there are withdrawal rates that we base that income off of, and we increased those by 20 basis points this past March. So giving those clients, a chance to get a higher income. And then the last enhancement we made, which I think is probably our most significant, our 4 Income 2 is a fixed index annuity with a long-term care, with a lifetime income rider that will, it's based for people that want to take income later. We had a 10% roll up on the benefit base for up to 10 years. We've increased that from 15 to 15% for up to 20 years. So for clients that want to take income down the road, and I'm going to go into detail on all of these as we go through each one, but just wanted to let you know about the enhancements that we've made on these products. So the first one I want to talk about is our 4 Accumulation 2. So this one, we have our base product that somebody can buy, and it's a $25,000 minimum to purchase it. And you can choose a 5, a 7, or a 10-year surrender charge schedule. And when I say surrender charge schedule, it's something, depending on how much liquidity the client wants. If they have a 5-year surrender charge schedule, after 5 years, if they get out of the contract, they won't have to pay any charges. They can just walk away with whatever their account value is. Or, if you can go longer, 7 or 10 years. So it's just a matter of choosing how long you want to be able to be in that annuity and be able to walk away with your account value without any charges. So we do have a 5, a 7, and a 10-year. And with this product, you have no market risk. You're not going to lose any money. There's no fees. You don't have to pay any fees for this. And money will grow tax deferred inside of this annuity until you take it out. So you're not going to be getting 1099s while the money is growing inside your 4 Accumulation 2 product. And then with the product, it's a fixed index annuity. So we have several different investment allocations that the client can choose from to invest their money in. I'm going to highlight some of our more popular ones. The S&P, everybody knows the S&P. It's on the news, you hear about it. The S&P over the history of the market basically returns 75% of the time. So 3 out of 5 times your client's most likely going to get a credit with the S&P. So our S&P 1-year point-to-point with cap is very popular. And a cap is basically how much return you can actually get. So right now, like on our 7-year duration, it's if you put 100,000 or more in, it's at 9.5. So if the cap's 9.5, that means you can make all the way up to 9.5. So if the S&P does 5%, you'll get 5%. If it does 6, you'll get 6. If it does 9.5, you'll get 9.5. If it does 12, you'll get 9.5 because of the cap. But 9 and with a fixed index annuity, getting between 5 and 7% is like a really good return. There might be some years you might do better than that, but you're never going to go below 0. And you're always going to build on what you put into the contract. You're never going to have to suffer a loss where you're going to have to try and make up that difference. Because when you have a loss, you have to get a higher percentage to get back to where you were than if you did not have the loss. So with this product, you're not going to experience any of that. So the next 3 are all riders that you can add to the base product. And the first one I'm going to talk about is our premium bonus. So our premium bonus is going to be a 14% bump to the client's account value day one. And that's available on our 10-year surrender charge schedule only, just on the 10-year surrender charge schedule. So if a client elects this, if they put $100,000 in, day one, their account value is going to be $114,000. And what's nice about this is it's approved in all states, the bonus, except for New York, because we don't do any business in New York, but all states, and it goes up to the maximum issue age of age 85. To buy this product, you just have to be able to sign a contract. World Financial Group likes you to be at least 30 years old to buy it. but 30 is pretty much the minimum, 85 is the maximum. And with this product, the 14%, somebody who's 85 can buy it. And where we feel like we really win with the premium bonus is with clients that might have accounts that are not doing well right now with the, in the market. Clients that might be in 401ks where they have volatility, they don't have any protection on them. Clients that are in brokerage accounts where they're seeing their accounts go up and down. If they transfer that into our 4 accumulation 2 with that premium bonus, they're going to be able to, make up that loss into their account, and then just grow their account from there, and then not lose anymore. That's where we're seeing a lot of success with it. Also, with clients that are at older ages that want to basically get a bump in their account value, and like I said, it does issue up to age 85, and with clients that might already have annuities already, that might have low renewal rates, their rates are really low and their fees are high. If they transfer that into our premium bonus, they can make up the difference there. So that's where we're seeing wins with that premium bonus. And again, there's no fee for it. And it's only available on our 10-year surrender charge schedule. So that's the premium bonus. That's one of the allocations that can be added. I'm sorry, one of the riders that can be added to this contract. If you choose one, you can't choose any of the others. You can't mix and match them, but that's our premium bonus. And then the next one I want to talk about is our growth accelerator option. This is basically a buy-up option for caps and participation rates. So if clients want to get a higher participation rate or cap, they can pay a fee of 1.25%. And where we see this working really well is in low interest rate environments. If clients want to get a higher rate, and what's nice about it, it's flexible, and it can go on our 5, 7, or our 10-year duration. And what's nice about it is if a client decides they want to put it on for like a 1-year term, and at the end of that term they decide I didn't need to pay that fee, they can take it off. Or if at the end of that term they think interest rates really have dropped, I want to add it, they can go ahead and add it. So it's really flexible. So that's our growth accelerator. It's basically clients can pay an additional fee to get higher caps and rates. And then the last one I want to talk about is our enhanced death benefit option. And we think this is probably our most slept upon rider. So has anyone get any of their clients turned down for life insurance? Probably everybody, right? So with this, our enhanced death benefit, this can be added to the 5, 7, or 10-year duration. And, there's no underwriting with it. So as long as, the client we actually increased the issue age for this from 75 to age 80 last year because people are living longer. So there's a need for an enhanced death benefit. So it's going to be a 7% simple roll-up on the client's purchase payments for up to 15 years or age 90, whichever comes first. So the way this works is you have basically think about 2 buckets. You have say you put in $100,000. Your first bucket is going to grow with however your allocations do and however that credits. The second bucket is going to be rolling up at 7% for up to 15 years or age 90, whichever comes first. So basically, if you put $100,000 in your death benefit's going to go 107, 114, 121, 135, 128, 135, and so on until it gets up to year 15. Or if somebody buys it at age 80, it's only going to roll up for 10 years to age 90. And then at the time of death, whichever is higher, the actual account value or that death benefit roll-up is what's going to pay out to the beneficiaries in a lump sum. So this is a good product for clients that want to leave a legacy to their beneficiaries and maybe can't get life insurance, or they just want to leave an extra legacy for them. And this contract also works really well for clients that have traditional IRAs that have to take required minimum distributions. So basically the government is making you take money once you turn 73 now, eventually they're going to be increasing that age, but those people have to take money out of their traditional IRAs per the government. And a lot of people don't want to do that. So if that's the case, the death benefit's going to be reduced dollar for dollar by those required minimum distributions coming out. So if the distribution amount is 3%, the death benefit's still going to roll up at 4%. So it leaves a really healthy death benefit, even though they're taking RMDs. So that's another rider that can be added. And like I said, it does pay out in a lump sum. A lot of other companies that have enhanced death benefits, you have to take it out over time. This one does pay out as a lump sum. There's a cost for this one. So if you're 70 or younger when you purchase it, it's a 0.5 point. And if you're between 71 and 80 when you purchase it, it's 0.95%. And that fee does not come off of the death benefit. It comes out of your account value. So something really good to consider if you have clients that can't get life insurance or want to leave an extra legacy to their beneficiaries. So that is our for accumulation 2 product. Does anybody have any questions on anything I reviewed with this?
I do, Christy. And I got a whole list of notes that I'm writing here.
Okay. Okay.
but so I do. First with just the enhanced death benefit. So with the 7% roll up, is that in addition to what the index is doing, such as
it's separate. So there's 2 buckets. So but at the time, so say your account value, you're in the S&P, and that whatever that credits, and then you have your other bucket, which is in my example, the 100,000 rolling up at 7%. That's your other number. At the time of death, Global Atlantic's going to see which number is higher, and that's what's going to pay out to the beneficiaries.
Okay.
Does that make sense?
It does. It does. So if there's a person who, say they're older, right, and they, because of health issues, they can't qualify for life insurance, then if they have an old 401k or a nice, sum of money somewhere, they can put this into this account. It will allow them to have the growth, but also can increase their life insurance benefit over time. Yep. Okay. That's pretty awesome.
Yeah.
Now question, why would someone choose to get an annuity over like an IRA?
So, I mean, an annuity can be an IRA. So, I mean, you can either put non-qualified money, which is after tax money, into here, or you can put IRA money into this annuity. But are you saying like maybe an IRA, like maybe that might be in mutual funds or brokerage account or something like that?
Brokerage accounts, right.
Because with this annuity, you're protecting your money. It's not protected in the mutual funds or the brokerage account. Those values could wind up going to 0. Or you could go negative. With this, you're never going to lose any money. You'll never lose your principal. So if you put $100,000 in, you're not going to lose it. You'll only grow on it. Whereas with a mutual fund or a brokerage account, you can put that $100,000 in and have nothing at the end.
Right. Right. Last question, and then I'm gonna open it up for anyone else. With the I think it was I'm not sure which one. It was premium bonus or accelerator growth. You said that you can purchase a higher cap?
Yes, on the growth accelerator.
Okay, so what would be the maximum cap you can get? Is that the 9.5 or?
No, so with the growth accelerator, it would be 12% would be the cap. Okay. And actually all of our rates can be found on our website, which we can like go through at the end. And when you go onto our website, you don't have to be registered. You can just go on, you can just go on and look around. You don't have to be registered on the website. Okay,
good stuff. Anybody else have any questions? Before I told you it's going to be heavy tonight. Thank you.
All right. So next I'm going to move on to our income products. So, today only about 17% of US companies even offer pensions anymore. Like hardly anybody has a pension. It used to be the case everybody had one, but now people have to basically, set aside money and create their own pensions for themselves. We did a study and we asked, people turning age 65 in 2024 through 2030, and we asked them, are you ready to retire? And most of them said no. So that's kind of a scary thought. And a way to think about, income products is, when you're with your clients, you want to ask them, are you ready if you ask them, are you ready to retire? Well, I'm ready to retire. Everybody's ready to retire. You want to ask them, are you income ready to retire? So, and that's going to get them thinking about what they have, like, what's in their pie. They might have real estate, they might have a brokerage account, they might have a 401k, and then annuity is going to be a piece of that pie that's going to help them comfortably retire. So our Income 150 Plus SE is a fixed index annuity with a lifetime income rider. And this one is best for clients that want to take income immediately or within the first couple years. And the reason why is because we give you a 20% income boost to your benefit base day one. So immediately we're adding 20% to your benefit base. So again, think of it as two buckets. We're going to use the $100,000 example again. You put $100,000 in day one, your account value grows, however that grows, your benefit base is 120. And that's going to be the number we're going to use to base your income off of. So day one, account value is 100,000, your benefit base is 120,000. And if you wait and do not take income for the next 2 to 5 years, we're going to give you another 7.5% on that benefit base. So it would be 7,500 in years 2, 3, 4, and 5, because 7.5% of 100,000 is 7,500. And then by the time you get to year 5, your benefit base is going to be $150,000 to take income off of. This product is a $10,000 minimum to buy it. Minimum issue age to buy this product is 55. Maximum issue age to buy is 85. And you can see over here, we increased our withdrawal rates by 20 basis points. So, and the sweet spot for this product, people that buy this product are between like 70 and 75. People that are ready to retire and want to start their income. We are actually best in class for people in their 70s taking income immediately. If you go on to Annuity Rate Watch, we're going to come up as #1 for that. So you can see here a 70-year-old, if they put $100,000 in, they would have had a $6,900 with lifetime withdrawal payment. But with the increase, and I can't see over here because of the screen. Let me see. I noticed it goes to 8,000 something, which is the lifetime annual payment. Oh, sorry about that. Oops. My screen got messed up. What happened? Okay. So this is showing, what the lifetime annual payments would be after the 20 basis point would boost to the income rates. And with this product, we can do single or joint income. We can also do joint income with traditional IRAs. As long as the spouse is 100% primary beneficiary, we can guarantee income for both lives. And what's nice about this product is it comes with, if the client cannot do 2 of the daily necessities of living, we will double their income for up to 5 years under the benefit. And the client does not have to be confined, and there's no underwriting to it. We just have to have a doctor sign off, say, Joe Smith cannot do 2 of the daily necessities of living. And we all know what the daily necessities of living are. You can't feed yourself, you can't dress yourself, you can't, go to the bathroom by yourself, all those things. It's got to be able not to be able to do 2 of the daily necessities of living. And you have to have the contract in effect for at least 1 year, and then not be able to do 2 of the daily necessities of living for 90 consecutive days that can run concurrent with the 1 year, and then apply for your regular income, and then you can apply for the doubler. So, and like I said, it's really easy. They can just have the doctor sign off on it, and you can spend the money however you want. If somebody wants to have their niece come in and take care of them, they can do that. Have somebody come in and do chores, whatever. They can use that money however they want, as long as we're saying they can't do 2 of the they have to every year get assessed by a doctor to restate that they can't do 2 of the daily necessities of living, and that does pay out for up to 5 years. And the cost for the income rider is 1.2%, and that does include that doubler. And it will not affect the client's income. It comes out of the client's account value. So this product is a great product for people that want to take income early on. And you know, it'll generate that lifetime income. And what's nice is they don't have to choose if they want to take single income or joint income when they're buying the policy. They can decide when they're getting ready to trigger income. Because we know that a lot of life events come up. People get married, people get divorced, people die. So, you know, they can make that choice when they're getting ready to start their income. So that is our Income 150 Plus SE. The next page is going to show you, it's a kind of a case study. Let me just turn the page on this. So with this one, it's just showing you if you have a 70-year-old, you know, and each year what their lifetime annual payment would be based off of $100,000. You can see like if somebody waited until you're 5, a 75-year-old gets a 7.4% withdrawal rate. Their benefit base is $150,000. They can take a lifetime annual payment of $11,100, and they can, if it doubles if they can't do 2 of the daily necessities of living, they go to $22,200. So this is our Income 150 Plus SE. Does anybody have any questions on this one?
There was a question in the chat. What was the age limits on those?
So 55 is the minimum issue age. 85 is the max. And in order to get that income doubler, you have to be 75 or younger when you purchase the policy.
When you purchase the policy, okay.
Yeah, when you purchase it.
Okay.
If somebody who's 76 buys it or older, they won't get the doubler.
Gotcha. Question. This is another question, just scenario that popped in my head. Okay, say for instance, a person already has an annuity, say, I'm not annuity, I'm sorry, a pension. Say they have a pension at, you know, with the state or with their, you know, one of those people. And say for instance, when they get ready to retire, can they take that pension, you know, and cash it out, do like a one-time payment, and then buy one of these instead?
They could, but one thing you would want to take a look at is that a lot of times with pensions, no one's going to beat what a pension's giving out. Like the rate that they pay at is usually pretty good, but it's always worth taking a look at to see if our, you know, if we could generate a higher income than the pension plan that when they get that payment. But I've just, in all my years, most times we don't beat pensions.
Okay.
But I mean, it's always good to take a look, but
Gotcha.
Yeah, if somebody's got a pension, they need to hold on to that. It's like,
okay.
Any other questions on this one? Just want to keep in mind people, you know, that want to take income immediately or within the first couple of years, this would be the product for.
Gotcha.
All right, we'll move on to our 4 Income 2. So this one was for people that want to take income early on. The next one is going to be best for people that want to take income later on. Like, what the heck? Wait a minute. Sorry, I don't know what's going on with my screen here. Hold on a minute. I think that my one slide's missing. Well, I can talk through it. I don't need it. So our 4 Income 2 product is a product for clients that want to take income later on, like maybe 5, 10, 15, 20 years down the road. And the reason why is because we just made an increase on our benefit base. It was a 10% simple roll up for up to 10 years. Now it's 15% for up to 20 years for that number that we can use to base your income off of. And basically what we say is that if you know, we can basically double it after 7 years and we can triple it after 14 years. We did a rough math calculation. If you put $100,000 in and you waited the full 20 years, that would become $400,000 to take your income off of. So, I mean, it could be really good for people that might even still be working, that have money set aside for retirement. You know, that could be in volatile accounts like brokerage accounts, mutual funds, even 401ks, to maybe transfer that money over into our 4 Income 2. And then, you know, maybe when they're 10 years down the road, 20 years down the road, and when they're going to stop working and want to retire, they're going to have a really nice benefit base to generate a nice income for themselves. And then this product, the minimum issue age is 45, but the income rider doesn't start until 50. So we recommend you don't buy this at 45. You go into maybe the 4 accumulation 2 or something that's going to give you growth. And then when you turn 50, at 50, the income rider will start. And that's when we start charging you. It's 1.2, and then it will roll up at 15% until you take income or you're 20, whichever comes first. And let me just see what I got here. I don't know why this isn't. Let's see what is coming up next. Okay, so with this product, if a 55-year-old, were to purchase it and put $100,000 in and they waited until 75, here we go. We have the $400,000 as their benefit base. They get a 6.8% withdrawal rate, giving them that $27,200 a year for the rest of their life. And then and this also has that income enhancement benefit where if you can't do 2 of the daily necessities of living, will double the income for up to 5 years. This would double their income to this would be 50. What is it? 20. I can't see the number on the side. It's 54.4. Sorry. So that would double it. But yeah, this is great the way that it rolls up, because basically you have your account value. So again, it would be $100,000, and then your benefit base is rolling up at 15%. So 115, 130, 145, 150, and so on. And like I said, it will roll up until you're 20. So this is great again for clients that want to take income down the road, and they're maybe not even retired yet, but it'll create a nice little nest egg for them to take their income off of 5, 10, 15, 20 years down the road. So that's our income 150 plus. The fee for this one's also 1.2%, and it comes out of the client's account value, doesn't affect the income. And this one you can take single or joint income as well. And you don't have to choose it until it's time to trigger the income. So that is our 4 income 2 policy. Any questions on this one?
I do have a question. When,
sure.
Say for instance, the client passes away, right? So the spouse, if they start receiving income from the account, from the annuity, is it at the same amount that the deceased person was receiving it?
Yes. If it's spousal, yes, it's the same.
Same amount. Okay. And then if the spouse, sorry, go ahead.
No, the only thing is if when it's spousal, it's the withdrawal rate's a 0.5 point less based off the younger spouse.
Okay. Gotcha.
So here, if it was like, say it was a 65-year-old, the lifetime withdrawal rate would be 5.05.
5.05, right?
Yeah.
Okay. And then once the spouse passes, then the death benefit remains.
Yeah, if there's anything left in the account value, if they haven't taken up all, drained it from the income, but if there is something left in the account value, that would go to the beneficiaries.
Gotcha.
Yep.
That's good.
Yeah.
Good stuff.
But with this product and the Income 150 Plus SE, the main focus is to generate that lifetime annual payment. If you have somebody looking for, it would be nice if if there was something left for beneficiaries, but the main focus is to generate that lifetime annual payment. The 4 accumulation 2 is probably better if you're thinking death benefit. So those are our fixed index annuities. And what I wanted to share is that we actually have something that's exclusive to WFG. It just came out this year. It's our fixed index annuity program. So any of the products I talked about tonight, you have to go on to Reg Ed and do the product training if you want to write any of these. So we have a fixed index annuity specialist program that we started this year. And let me stop sharing so I can show you what that looks like. If you complete all 3 of the product trainings for the products we just went over tonight, we will send you this certificate. Let's share this. Where did it go? Here we go. We will send the certificate to you if once you've completed the for accumulation 2, for income 2, and income 150 plus SE product training. We run a report every month to see who's done it, all 3, and then we send this out to you with your name on it, and you can put it in your office or hang it wherever you want to say that you are an FIA specialist with Global Atlantic. So we have that. And then also I wanted to share with you, we have a Premier Partnership program that basically is if you sell any of our 5 annuities and you get 5 cases totaling $2 million by the end of December of this year, December 31st, we'll give you a 0.25% commission bonus back to $1 if you hit $2 million. And that gets paid at the end of the month. It doesn't get paid with the regular commissions, and it goes through the WFG grid. So, and as you can see, there's tiers that go all the way up to $10 million. So if you do $10 million with us, we'll give you 1.5 extra in commission bonus. So something good to strive for. You know, if you hit that $2 million, you're in, and then you can just only go up from there. So that is our Premier Partnership program. So, and then there's one last annuity I wanted to talk about is it's because I mentioned that people buy annuities for accumulation, income, and then for long-term care. So we have our annuity, it's called 4Care. It's a fixed annuity, so it has a fixed interest rate with a long-term care rider. And it only takes non-qualified money, after tax money. And what's great about it is it can double or triple your amount, your purchase amount to pay for qualified long-term care. You know, most people, you know, basically 73% of people have non-qualified money set aside to pay for healthcare emergencies. Well, there's no bigger emergency than needing long-term care. So our 4Care product is very simplified underwriting that can double or triple your account value to pay for qualified long-term care. And it's very simple underwriting. There's a medical questionnaire that has 10 questions on it. And depending on how the client answers those questions determines if they qualify or if they get the 2 or the 3 times coverage. So the first 5 questions are like pretty severe conditions. Like if you see the client and any of these, you're gonna know they're not gonna qualify. So if they're already in a wheelchair, they're in a nursing home, they have Alzheimer's, they have dementia, they have Parkinson's, you know, really severe stuff. So that won't qualify them. But if you move into getting the 2 times versus the 3 times, you know, somebody that has cancer, somebody that has heart issues, somebody that has diabetes with insulin, those are all conditions that would qualify them for the 2 times coverage. So it is a 2-step process. And then for clients who are between 70 and 80, there's a cognitive phone interview. And what's nice is we can, if somebody doesn't speak English, we can always set it up ahead of time where we can get somebody that would actually speak their language to do the phone interview. But it is a 2-step process. So you do the medical questionnaire and HIPAA form first, and there's no medical exam with this. So that's, you know, really nice. There's no medical exam. They only do a prescription check. You fill out the medical questionnaire and HIPAA form, you send that into our underwriters. They usually get back to you within 24 hours. Now, sometimes it might take longer if they have to get somebody on the phone for a phone interview. But you know, they'll let you know if the client qualifies and what they qualify for. And then after that, you can go ahead and do the application for the 4Care product. So, you know, 4Care is a great product that can, you know, double or triple a client's account value to pay for qualified long-term care. And what's nice about it is it only accepts non-qualified money. So because of that, all the money that comes out to pay for qualified long-term care comes out tax-free. So, you know, that is a huge advantage. So, I mean, people that have, you know, might have non-qualified annuities or life insurance that they're planning on setting aside to use for healthcare anyway, could 1035 exchange those over into 4Care with the cost basis that it all comes out tax-free as they're paying for qualified long-term care. So that's just kind of a preview of our 4Care, and you have to have your health license on your line of authority to sell the 4Care product. But if anybody has any clients you think that might be a fit for ForCare, also I want to show you basically our team flyer here. Let's see. All right, so this is our team. So we all work with World Financial Group and AMS. So Vanessa Schmidt is she's our account manager. She's out in the field a lot. Rob Tomeno is the leader of our team. I'm your annuity business development person. I'm your main contact. I do Zoom trainings, do case development, run illustrations. I can pretty much help you with whatever you need. And then my internal wholesaler is James Utley. He can do illustrations, service issues, website issues, all that kind of thing. So if anybody wants to take a picture of this, please take a picture. You'll have all of our contact information. And I know I threw a lot at you, so you can always, feel free to reach out, and, we can always talk about any cases you think, you might have clients that would be a fit for our products. Does anybody have any questions on anything I went over?
Don't get quiet. Don't get quiet. I know it was a lot, but
it is a
that
lot.
was all good stuff. Any questions?
No, but or if you come up with any questions later, like I said, just feel free to reach out. Call me, email me, whatever works for you.
Yeah. Also, I put in the chat a follow-up form in case you want to follow up. If you have any questions, we'll be happy to answer any additional questions you might have. So if you go into the link that's in the chat, feel free to put it there as well.
Well, like just to wrap up, we had our 4 accumulation 2 product, which was for growth and accumulation. Clients not going to lose any money; they're only going to grow it. We had our income 150 plus SE that's going to generate a lifetime annual payment, and it's great for clients that want to take income immediately or within the first couple of years, because we give that 20% income boost to the benefit base day 1. And then we had our 4 income 2 product, which is going to be for clients that want to take income later, that has a 15% roll up on their benefit base for up to 20 years. And then we had our ForCare product, which is for clients that are looking to double or triple their account value to pay for qualified long-term care. So, if anybody needs any illustrations, any clients they think it might be a fit for that, please reach out to me, and I can certainly run those for you. And also, I'm going to put our website in the chat, because you can go on there. We have really good information about our products on the website. You can also run your own illustrations if you'd like to do that. It's globalatlantic.com/professionals. And you can also find information to do the product training. And anybody that needs to get contracted can go through AMS. They can help you with that to get contracted with Global Atlantic. But if you have any specific questions, just please feel free to reach out to me. I'll also put my phone number in the chat. And I'm not in Iowa, even though it's an Iowa phone number. I am in Philadelphia.
Awesome. Well, Ms. Christy, thank you so much for your wealth of knowledge. This was great. This was definitely an eye opener for all the options that's available for the great wealth transfer that's taking place. Number 1, and then 2, how we can help more people. Think about some of our grandparents and aunts and uncles. They didn't have access to this information. They didn't have a Christy to come and get on a Zoom call to tell them what they could have did with their money, right? But we're blessed to be able to have her explain different options available that maybe you knew about, but a lot you didn't know about. So if we could be of any service, if you couldn't go and tell the whole world, I met somebody named Christy and she told me, and we'll be able to, change this generational wealth gap. and we'll be able to provide generational wealth for families. So thank you so much for hanging out with us, Christy. Let's give it up for Christy.
Thank you. Thank you. If you guys need anything, please feel free to reach out. Have a great night. Okay.
All right. Have a
Bye.
good night, everybody. And we'll see you next week for Money Making Mondays. Again, we're going to be talking about AI. So feel free to tell a friend and tell a friend to come hang out with us and let's understand how AI works. If you have any questions about this, hit me up in the link. I'm happy we do have someone new on the line tonight. Hello, Mr. Johnson. Thanks for coming, hanging out with us. And just fill out the link. I want to talk to you. I never had a chance to talk to you before. Oh, he came off
Will
mute.
do. Will do. I'll fill it out.
Okay. Okay, great. Great. Well, have a wonderful evening, everyone. To all the mothers, I hope y'all had a wonderful Mother's Day. And let's keep this momentum going. Oh, we got Rose came off the line. Hey, Rose. Any takeaways from tonight? Any takeaways from anybody? We got 3 more minutes. Any takeaways?
Don't wait till you get old to do it. Don't do that.
Yeah. You know, I thought about that too. I said, you know what? I got a lot of goals to reach. I got a
There's
lot
a
more
lot of
goals
different
to
ways
reach.
to get money without adding an extra service to your pot.
Yeah. Awesome. Well, y'all have a wonderful evening. As always, it was fun hanging out with you. And Mr. Johnson, I can't wait to talk to you. Fill out that link and I'm gonna call you tomorrow. Have a good night, everybody. Bye-bye.